So technology stocks has been on rise for the last couple of years. We see companies like Amazon, Facebook, Google, all getting very, very big gains ranging from 20% all the way to 70%. So these companies, what they have in common, they are actually the internet titans of the US. And on the other side of the globe, we have companies like Alibaba, Tencent, JD also growing at the same rate. And what they have in common here is actually being the internet titans of the East. So in today's video, we're going to explore how we're able to combine the East and the West and get the best ETF that we can get in terms of technology, combining both sides of the world. Let's go. Hi guys, so my name is Jordan and once again, welcome to the channel. It's been a while since I posted or I filmed a video because it's been crazy for the last few weeks, a little bit busy with work and stuff. But finally, we're back to filming again. So in today's video, we're actually going to talk about an ETF that I found out that combines the best of the East and the best of the West in terms of being internet titans. So these companies that are in this ETF, they actually own businesses that are based off the internet. So you're looking at companies like Facebook, Google, Amazon, Tencent, JD, Alibaba, all these kind of e-commerce kind of businesses. And the unique point about this is that it combines the companies from the East, which is you have China, which is the biggest player in the world right now, and as well as the US. So it is the best of the two superpowers, all the best tech companies in one ETF itself. And one of them that I like to highlight is actually Tencent. So if you have no idea what Tencent does, let me give you a comparison. Facebook has about 2.2 billion users across all their social media platforms worldwide. Tencent, they have, wait for it, 2.4 billion users across all their social media platforms. I won't say worldwide because most of them are in China, but they have a lot more users, 10% more users than Facebook. So what does Tencent do? Basically, they're an internet firm, and what Tencent dabbles with is the gaming industry. Think of Call of Duty Mobile, television and cinema as well. Movies like Wonder Woman, Venom, and the upcoming Monster Hunter, they do have a share in it as well. They do have a portion in the online comics. They do have a portion in music where they own 10% of Universal Music Group. They do have video streaming as well, which is quite something similar to TikTok. E-commerce where they have Tenpay, which is like the PayPal of China. They have WeChat, they have WePay, they have WeSure, they do have WeBank as well. So this is like a whole list of businesses that Tencent is involved in, and this is just one of the businesses or companies in this ETF. So this begs the question, what is this ETF? So the ETF in question here is TTTN, which stands for Tiger Shares China US Internet Titans ETF. In this ETF, they hold about 21 companies, and the top 14 of them, which is one of the bulk of the holdings, they have things like 8.7% in Amazon, 8.5% in Tencent, 8.3% in Alibaba, 7.2% in Facebook, 7.1% in Google, 4.7% in Meituan, 4.1% in Tencent Music, 4.3% in Netflix, 4.2% in Netease, 4.18% in VIP Shop Holdings, 4.12% in Baidu, 4% in MercardoLibre, 4% in JD, and 3.99% in Adobe. So in this list of 14, I'm pretty sure most of us have heard most of them, but there are a few that even myself I have not heard of, but I have heard it through the internet, but I got no idea what they do. So your boy here actually did the research for you guys so that you guys don't have to go through hours and hours of research. I'm going to give you a quick review of what this company do. So the first company that I've researched on is actually Netease. So they're an online gaming company. They dabble mainly in Chinese games, but do not get turned off when you hear me say Chinese games. Because if you look at the population of the world, China has the most population at 1.2 billion people right now. And just imagine if 1/3 of these people are playing these Chinese games, that is the amount of revenue they'll be earning via skin, diamonds, gems, season pass, and things like that. So gaming in China is really big, especially mobile phone gaming right now. On top of that, NetEase actually has a partnership with Marvel, and they created a Chinese superhero called Arrow. I don't know how you're going to say the name, but it's AERO. This is actually a Chinese character that I've never heard of, although I watched quite a few Marvel films. I'll put a link in the description where you can check out who this hero is. And it looks really Chinese, like from the comic book. So the next company we have is actually Meituan. Meituan is an O2O e-commerce platform that provides lifestyle services to customers. So if you are watching from Singapore, this is something that Grab wants to or aims to be in the future, where they can deliver food, provide hotel booking services, movie tickets, hospitality activities, and much more. So basically, this app allows you to create a lifestyle, and you don't have to go to different websites to book tickets for movies, or go to booking.com to book for cheaper hotel stays. Everything is on Meituan itself. So just some numbers for Meituan itself. By Q1 of 2020, they have about 448 million users. They have 61 million merchants on board as of Q1 2020 as well. And the revenue for 2019, it's $13.7 billion. It's not in renminbi, but it's actually in the US dollar itself. Because Meituan actually started as a food delivery service app, so the market share just for them in the food delivery space is actually 65%. Definitely there are a lot of competitors in China because things move really fast there. But having a 61% market share, that's a really, really big deal. So VIP Shop Holdings provide online discount via e-commerce platforms. So they're the largest online discount provider in China with a 38.1% market share. So if you look at some numbers that VIP Shop Holding has, they have 69 million users as of 2019. And in 2019 itself, they have 566.3 million orders, which gave them a revenue of $13.4 billion in revenue last year. So for the last company that I've never heard of before is called MercardoLibre. So this company is actually an Argentinian startup, but they are incorporated into the US. So I'm not sure if they fall under the US company or are they still an Argentinian company, because they started in Argentina and then they moved into the US, incorporated there, but the people are from Argentina. But you get the idea. So MercardoLibre actually owns 5 different kind of business, or they have 5 different business arms. The first one being Mercado Pago, which does online sales and a payment platform. They have Mercado Publicado. I'm not sure if I'm saying it right, but that's what I wrote in the script. So Mercado Publicado does the advertising arm for MercardoLibre. Mercado Shops, which is an online tool that allows you to build an overall shopping experience or a platform to give your customers a better experience when they're shopping with you. They have Mercado Credito, which is a company's, they provide credit line for businesses. MercadoLibre Clasificados, that one's like the real estate and automobile listings platform. So to put this company into a simple sentence, this company basically functions like Carousel, where you allow buyers and sellers to transact products or services, which gives you a tool built in like Shopify that allows you to build a beautiful shop, give a customer experience, and it allows small businesses to run virtual shops as well. And they provide a secure payment platform that accepts a diversified forms of payment and a subscription-based classified ads for real estate and automobile. So if you are based in Singapore or you are currently in Singapore, this is what it looks like. So it looks like Carousel plus Property Guru plus Shopify plus SG Carmart plus PayPal. So as you can see, the stocks that are built into this ETF, or the stocks that this ETF track, they are all tech companies. They are all tech firms, unlike the one that we talked previously, where you have more tech like QQQ. They have about 40% in tech. we'll just hop into the app to take a look later on. The expense ratio is a little bit high at 0.6%, and they do not pay dividends. So what I expect to get out of TTTN is that it will provide a growth spurt just like what QQQ does. I do have QQQ in my portfolio, and it has grown quite a bit, I think about 15 to 20%. So these are the kind of gains I hope to get from stocks like this. Alright, so we're just gonna hop on into the TigerBrokers app. I'm gonna take you through how you can actually find out more information about the stock that we talk about, which is TTTN. This is my watch list, but let's search for TTTN. Yep. So you can see the stock here that tells you what is the ticker right at the top. The current price is actually $37.52 as of this video's recording. And if you look at the tab that says analysis, this actually shows you what is the diagnosis of the ETF itself, the comparison between the S&P 500 ETF over the last 7 days, the last 30 days, the last 90 days, 180 days, 1 year, and the year to date. So if you click onto news, you're able to see the latest news that is related to TTTN. Oops. And also, if you look at the About page, it tells you the fund summary. It tells you the fund summary, what the company is doing, what the company is about. And that's Bailey. So just to add on to a new update that TigerBrokers has is that on the chart itself, if you see this little corner, they have this thing called a magic point. So this one actually tells you, at which point the stock seems to be turning the tide, at which point of time is the stock, tipping towards a bullish signal or moving towards a bearish signal itself. All these are tools that can help you with your trading, but please do not take them as the only tools that you use when you trade. Just like buying any stock itself, you do have to do your own diligence, you have to do your own research before using your hard-earned money to buy that particular stock or that particular ETF. And I think it's also good to do some research on your own and not just believe everything that I say, because what I tell you is based on my experience itself. Whatever I'm sharing today is my own opinion. But definitely do take a look at TDT and let me know in the comments below. Is this ETF something that will be interesting to you because they have a lot of tech companies in there? Or is this ETF a bit too risky for you because with tech firms they tend to swing very, very hard? That's what I feel is going to happen in the next 6 months, in the next 12 months when things get a lot better. A lot of people will be investing in these tech firms because look at Tesla. They're still selling cars, man. Like, even we don't have Teslas in Singapore. I think we have like 2, but they're still selling Teslas worldwide. But nonetheless, if you have enjoyed this video, do drop a like, comment, subscribe, and I'll see you in the next video. Bye.